All right, everybody, welcome back to the show. We're diving deep today
Yeah.
into the world of retirement income.
Always a fun one.
It is, and this one's particularly interesting, I think, for
Yeah.
folks who are looking for a little bit more predictability, a little more stability when it
Mm-hmm.
comes to planning for those golden years.
Absolutely.
So we are looking today at the EquiTrust Certainty Select multi-year guarantee annuity.
That's a mouthful.
It is a mouthful, but we're going to break it all down for you.
Absolutely.
And the source material we have for this deep dive is some marketing material from Diversified Insurance Brokers.
Sounds good.
So let's jump right in. One of the first things that jumped out to me here was this phrase, single premium deferred annuity.
Yeah.
I think for some of our listeners who aren't financial experts, that might sound a little bit intimidating.
Right.
So could you break that down for us?
Sure. Yeah. So single premium just means you're making one lump sum payment up front. Kind of like if you were buying a CD,
I see.
but over a much longer time frame. And then the deferred part, that means that the money that you put in is going to grow over time, and it's going to grow tax deferred.
Okay.
So you don't actually pay taxes on the growth until you start taking withdrawals.
Okay, so that's a good thing when it comes to retirement planning.
Yes, definitely a big advantage there.
All right, so we're putting in a chunk of change.
Yeah.
We're letting it simmer.
Let it grow.
It's growing without the tax man taking a bite out of it every year
Exactly.
until we need it. But what makes this multi-year guarantee so special?
Well, with a multi-year guarantee annuity, or MYGA for short,
And overGA.
you're not subject to the ups and downs of the stock market.
Okay.
So you get to choose a guaranteed period. Could be 3 years, 5 years, 6, 8, or even 10 years.
Wow.
And during that time, you're locked in at a fixed interest rate.
Oh,
So it
good.
doesn't matter what the market's doing, you're going to see that steady, predictable growth.
That's huge for someone who's risk averse, right?
Absolutely.
They don't want to have to worry about,
Yeah, if you're close to retirement and
Okay,
you
right.
don't want to see your, retirement nest egg suddenly drop, 20, 30%,
Right.
this is a great way to protect yourself from that.
Okay, so 10 years, though, that's a pretty long time to lock in a rate.
Yeah.
What happens if, let's say, interest rates suddenly go through the roof a couple of years down the road?
Yeah, that's a good point. You are essentially making a bet on the future of interest rates with a MYGA.
Okay.
If rates climb significantly, yeah, you might miss out on some potential gains. But on the flip side,
Yeah.
if rates plummet, you're still protected with that guaranteed return.
Right. It goes both ways.
Exactly. So it really depends on your individual risk tolerance and how you see interest rates trending over the long term.
Okay, so we're weighing, the certainty of that fixed rate versus the possibility of missing out on higher returns if things really take off.
Exactly.
Okay, right. So moving on, I see here it talks about penalty-free withdrawals
Right.
of accumulated interest. Now you don't got to ask what's the catch.
Well, the catch is that those penalty-free withdrawals, they only apply to the interest that you've earned,
Okay.
not to the principal that you initially invested.
Oh, I see.
So if you need to tap into that principal before the guarantee period is up, you might be looking at some surrender charges.
Oh, okay. So it's kind of like an early withdrawal penalty.
Yeah, exactly, like you might see with the CD.
Gotcha. Okay, so could you give us an example of what some of those surrender charges might look like?
Sure. So let's say you withdraw from the principal in the first 2 years, you might be hit with a penalty of around 8%.
Okay.
And then typically that percentage decreases as you get closer to the end of the guarantee period.
Okay, so less of a penalty the closer you get to that maturity date.
Exactly.
Now, I know the material here mentions some exceptions to that penalty, like if you need the money for healthcare.
Yeah, so there are certain situations where those surrender charges might be waived,
Okay.
like if you need funds for a nursing home stay
Right.
or if you have a terminal illness. But it's always best to, check the specific terms of the contract
Mm-hmm.
and talk to a financial advisor about your own personal situation.
Got it. So there's some flexibility there, but definitely important to understand the details.
Absolutely.
Okay, so let's fast forward now. We've reached the end of our guarantee period. What happens then?
Well, at that point, you have a few options.
Okay.
You can renew for another guarantee period, hopefully at a rate that you're happy with.
Okay.
You can convert the annuity into regular income payments,
Right.
which is a popular choice for a lot of people who are looking for retirement income.
Makes sense.
Or you can just cash the whole thing out.
Take the money and run.
Yeah, exactly. But here's something important to keep in mind.
Okay.
If you don't make a decision within a certain time frame, usually around 30 days, the contract often renews automatically.
Oh, wow.
So you don't want to miss that window.
So set a reminder.
Yeah, definitely.
All right, so we've got automatic renewal. Something to keep in mind. One last thing I want to touch on before we wrap up is the death benefit.
Right.
This sounds like it could be a really important feature,
It can be.
especially when it comes to estate planning.
Yeah. With this annuity, your beneficiary is guaranteed to receive the full value,
Okay.
regardless of what's happening with interest rates or the market.
Got it.
And since annuities generally bypass probate,
Right.
which is that often lengthy legal process of distributing assets after death,
Yeah, nobody wants to deal with that.
yeah, it can be a real headache. So that transfer of wealth to your loved ones is going to be much smoother and much faster.
Okay, so that's a big plus for people who are thinking about,
Absolutely.
how they want to leave things for their heirs.
Yeah.
Okay, so to sum it all up, this EquiTrust Certainty Select MYGA, it offers a way to get that predictable stream of income in retirement,
Yeah.
potentially some tax advantages along the way,
Mm-hmm.
and then that death benefit that we just talked about, which
Yeah.
can be a big deal for estate planning.
And don't forget, EquiTrust has a really strong track record of financial stability.
Right, which is always reassuring.
Yeah, absolutely.
But like with any financial product out there, it's important to do your research.
Mm-hmm.
Consider your own personal circumstances.
Yeah. Does this align with your goals?
Exactly.
Your
yeah.
risk tolerance?
Yeah. There's a lot to think about.
Definitely.
And a financial advisor can be a huge help.
Absolutely. They can help you figure all that out.
Excellent point. All right.
Okay.
So as you're out there deep diving into the world of retirement income,
Yeah.
here's a thought to leave you with.
Okay.
How do MYGAs stack up against some of the other popular options out there?
Right.
Things like mutual funds or even investing in real estate.
Good question.
Each one has its own set of pros and cons.
For sure.
Understanding those differences is really key to making those informed decisions about your financial future.
Couldn't agree more.
All right, folks, that's all the time we have for today.
Enjoy the rest of your deep dive.
Happy deep diving, everyone. We'll see you next time.
See you a lot.